Hello everybody, Michael Silva here. Hope you're all having a good weekend. Is this gigantic move over here just another bear market rally? Very similar to here. Very similar to here. Very similar to here. Well, there's something to do with the volatility structures telling us there are some very strong similarities in these bear market rallies, which could be leading us to, hey, this could be the top of the rally or getting right around that. That's what we're going to talk about in today's stock market brief. Now, before you think that this is all bared up, understand that there are a lot of stocks. I even shared on the Discord this weekend, including my watch list, a bunch of names that are in bullish context, and they've been in this coiling up pattern, or they've been contracting. Remember, markets, basic principle of technical analysis, markets move between expansion, boom, and then to contraction. Then they move into expansion again, and so forth. And there's a lot of stocks that are contracting, coiling up, looking like they're a bit ready to explode. Either that could be to the upside or downside. Now, we like looking for these type of stocks because it allows for minimal risk, and then you can catch a potentially explosive move. Getting off track already, so we're going to just hop into it today. No intro. Now, this is what took place last week. This was all the macro data. All these red boxes right here, that means they were a major report. It was important to pay attention to these. All the shaded ones that are kind of bold black, those are more of a 2-star report. So they're important, but not nearly as important as the major. And with all of this data going on, you can see what took place in the S&P 500. We did not actually tag either side of the weekly expected move. Now, this is pretty crazy because this is now week 2 in a row of not tagging it, which makes me think this next week, buckle up, we're going to be tagging it, and I'll show you what those are momentarily. Now, if we look at the week-to-date performance overall, we were only up 0.79%. So rather muted week as we hold on to that inclining 5-period EMA. If you were to be more bearish, I'd say we'd have to get below that, and that opens the door to go test that psychological level 4,000. What else took place? Well, the probabilities of a 25 basis point rate hike are now at 81%. That's after all this macro data. That's after what we saw with some of the financial earnings. We are now looking at the Fed coming in, and they're in between a rock and a hard place here because it's either they start, pausing or cutting and potentially inflation takes off again, or they keep on rate hiking and potentially something could very well break. It's why we have to be very diligent with managing risk. Now, if you take a look at where were we, 1 month ago, this shaded area, the probabilities were significantly lower. Well, 1 week ago, we went a little bit higher. 1 day ago, we went a little bit higher. And then the current were even higher. So the probabilities seem to be really moving towards another 25 basis point hike. And then, as it stands there, both June and July, the market's saying, hey, we're probably going to hold there, and then we're going to start moving and cutting rates into December. Now, that's not what the base case was by Jerome Powell. He said that at his last meeting. We recorded that and we shared it here on the show too as well. He said that is not the base case. We need to hold rates higher for longer, but economic conditions, can dictate changes in that policy. Overall, what are we looking at for the yield curves? The 10s and 2s continues to kind of go sideways, but still remains 56 basis points inverted. The 10-year 3-month is at 162 basis points inverted, pretty much at its lows for a multi-year, actually decade, multiple years, right? We haven't seen this since the 1980s. Now, if we take a look at the dollar, compare in the dollar up top, S&P 500 below, I still find this to be very interesting. We're still within this channel that's going down in the dollar and a channel that's going up in the S&P 500. And this is eventually going to break to the downside or break to the upside. And the dollar is going to do the opposite move. That is more of an opinion that I have. And I think it's a very strong possibility to see that here likely soon to break this channel. Many people are saying that are very bearish the dollar and, we're going to lose reserve currency and it's going to fall apart. I'm overall with all that bearish news. I mean, we're down a little bit, but we're just coming back down to test this area. So we'll continue to monitor that. If we start seeing a breakout further in the dollar, I feel like that's going to be what pressures the S&P 500 down. I think you're going to see other assets take a little bit of a back seat there too as well. So it's something to pay attention to. Now, let's look at the volatility structure. Now, this is something I learned from a trader named Brandon Chapman. What he does is he looks at the 3-month volatility, so back month volatility versus front month volatility. That's that yellow line. And he pointed out that, hey, when we get up to this 1.2%, or 1.2, which is about 20% above the VIX, and the VIX drops, you can see here, pretty low, right? So actually where we close is, we haven't seen this low of a level, for quite some time, actually. I don't have the chart going back, but I know that's, pre-2022, I think it was. Okay. Well, what we called out, or what he called out, was when it reaches up a high level, high level, high level, that was actually marking the tops of these bear market rallies. So as the VIX came down, back month versus front month went up, okay? Back month up, back month versus front month up, volatility down, same here, boom, boom. And now what we're starting to see is something very similar. Back month versus front month is starting to make a charge up to that 1.2, and then VIX is hitting a low that we haven't seen for quite some time. And this, to me, tells me, hey, yeah, we might still have some more juice in the tank, but if this starts getting up in this area, as we've seen in the past multiple times, this is kind of telling us, hey, this could be coming to a period in time where we're going to consolidate, pull back, and things are going to have to kind of just resolve themselves. As it's resolved in the past, you can see bear market rally 1, faded. Bear market rally 2, faded. Big bear market rally 3, faded. Another one, faded. Another one, I don't know, but it's something to pay attention to. Now let's take a look quickly at the zones. The zones, I'm not going to explain too much what these are. I've done it multiple videos, and just to save time, I'm not going to do it. But I want to call out this. The volatility, this is the VIX, it is approaching that green zone again there too as well, which means it's at the lower range of these bands. And when it's at the lower range, you got to be a little bit careful, because if we start exploding more to the middle of the range or even the upper range, well, guess what typically happens? You typically see things that are negatively correlated take a little bit of a back seat. So that is one thing there that I want to call out. And I could bring up this. This is something, like I said, I share with my Patreon group. I put it all on the Discord. I do not charge a lot. I charge $9 a month, or you can save 16%. Just sign up annually. It's $90. And then you can get the zones, you get the weekly expected moves. I just added daily expected moves in there. I give trade ideas. I give my watch list. I give a lot of stuff. Okay, let's go on. This is all the volatility stuff that I share in the zones. I do VVIX, OVX, which is oil volatility. I just a whole list. I'm not going to read it all up. But what you can see here is on the right-hand side, you see a lot of these are starting to get green, which means that the closing price is coming closer to the low end of these bands. And if that's the case, like I said, last time we were here, you typically get what? Well, you typically get other names to start turning red. And these are, Google, right? It's coming to its upper range right here where it says, hey, we have about 1.5% upside to the high end of the band, but about almost 8% downside to the lower range. And these oscillate between upper and lower of these bands, and they kind of stay within them, but it gives you a good idea as far as risk management goes. So if volatility starts picking up, so take example for the NASDAQ volatility, okay, because S&P 100, these stocks are all kind of, more heavier tech names. It's closed at 22.22. The lower range is at 22.24, and this obviously is dynamic. It can head down more, right? But understand the downside is very minimal. The upside is quite big. So if volatility all of a sudden shocks to the upside, it's likely to see these big names, right, that are red start to back off a little bit. Okay, so that's something to pay attention to, and we have earnings obviously around the corner this week, I believe, this week we have Tesla reporting earnings. So keep an eye on that and other consumer discretionary names. Now, what kind of macro data do we have coming out next week? Next week, we have, 1 3-star report. So this is probably an important one to watch. Building permits. I don't know how that's going to affect the market. We have Feds coming out and talking, right? We have Bowman, Waller, Bowman again, Cook. Okay, I don't know what they're going to talk about, but just a barrage of Fed speakers. And then we have some other important data that's dropping. And Friday, we have some S&P Global Manufacturing, PMI Flash. These are just PMI flashes and so forth. It's important to know these when they hit the tape if you're in a trade intraday, because it can very well shake you out of a position very quickly. And you kind of want to just be aware and have that, in the back of your mind of when that could potentially take place. If you want to pull this calendar for yourself, you can go to tradingeconomics.com and go to the calendar section. You can change it to your time zone. Now, who's reporting this next week? We got all kinds of names reporting. If you want to screenshot this, it shows the days left. But I plan on bringing this back the night before on a market brief show and give you a good idea of expected moves for the big ones, right? Goldman Sachs is going to be a big one to watch. Bank of America, obviously. We have Netflix, we have Tesla, and a whole bunch of other ones. These are all part of the S&P 100, so they are the bigger names that will be reporting. Now, here's some key levels to watch and some important stuff. This is just looking at the daily chart of the S&P 500, okay, or the SPY. We're using the SPY as the proxy, right, the spider. Now, overall, there's some key levels that I want people to pay attention to. The first one is, where did the year open? This is a critical level because if price gets below it, that's pretty negative sentiment. Another thing is the line, and which is the white line. Okay, so 384.37. That is where the S&P 500 or the SPY opened up to start this trading year. And from that point, you can see we kind of exploded from that level, right? As we had that start of the year, it faded all the way back, and it's holding that level as a level of support. So this tells me right out of the gate, if this level gives way, that's a negative sign, a very negative sign for the S&P 500. And then from this point, we made a very strong move, but we haven't actually hit the high of the year. We haven't broken through that yet. Okay, that high level to watch out for is 418.31. And with the momentum, right, it's possible that we get this and people get very excited when we start a new high, and you can see sometimes bear traps. Now, I'm calling this out because we've already made a very aggressive move from basically the opening price of the year straight up, within a short period of time, up into this prior area of supply. So if we do decide to go over, is this like the best time to enter? In my opinion, no. What you'd want to look for is a potential pullback to put in a higher low, right? So we have a low, and you see it stair-stepping up. Okay, good. You have it stair-stepping up again. Well, then you'd want to look for another potential area. So where could that be? Well, we have that psychological level, 400, right? That's where the year-to-date anchor VWAP is. So if price does start to go up or if it comes back down like this, see if it starts to connect with this area and it can hold or potentially do what's called a U-turn, where price, boom, goes right through it, and then all of a sudden finds its support. It flushes some people out, but then we start going for another run. That to me would be a very bullish sign. Okay, but it's not necessarily something that I would want to chase unless if you're intraday trading and you're pretty tactical. Now, the other level I want to call out is this 377.83. This was the low of the year, and the low of the year on the SPY came on day one. So really this entire year, right, we've been above, right, the opening day's low. So that right there is 377.83. So as long as we can hold this level, this kind of zone in here between 377.83 to 384.37, I feel like that's pretty bullish. I'd be a little bit more cautious if 400 gave way and the year-to-date anchored VWAP, right? Because the average, based off the anchored VWAP, which is the volume-weighted average price is currently above it, which tells us that the average buyer of all that volume since this start point is actually above that price. So the majority of people, the average of people, are in the green this year. And that can change quick, right? Because we're not too far off from that level, right? We're up about 7% for year-to-date so far, or 7 to 8%, right around there. So that's something that I'm paying attention to going forward. Now take a look at the SPY on the daily time, on the 15-minute time frame. Overall, what have we been doing? We've been in a chop box. We're slightly up on the week like we previously discussed. We've been seeing massive volatility swings back and forth. On a positive note, we're above the month-to-date anchored VWAP. And you can see here the 5-period moving average held, right? We had a lot of volatility that last trading day of the week, and it started moving down. This is something that I called out here more in the Discord group for intraday traders, which is not something that I always do, but when I see it, it makes sense to call it out. We came back in and we tested not only the 5-day moving average, but it was in confluence with the week to date, and it was in confluence with the month to date, and it looked honestly like people were getting scared here, and then we started rallying towards the end of the day. Now, going into this next week, like I said, we haven't tagged the weekly expected move 2 weeks in a row. We got close last week, but we did not touch it. So I think that we're going to be coming strong for 418.41, or we're going to come strong for 406.51. So what do we watch for? Well, we can look at the daily expected move, 415.15, 409.77. Okay, so as it stands now, the bulls still remain in control. So if we start moving down here, there's still an opportunity to potentially say, okay, well, we still may actually very well bounce, right? Because we're still above the month to date, because we're still above the 5-day moving average, because the daily expected move is here. So that's what I'll be watching for potentially tomorrow. But if we get down here and we just doodle for the rest of the day and we just kind of flag out, I'd be a little bit more cautious. Why? Because, well, that could be just flagging and opening the door straight down to 406.51 while we have all of these earnings obviously coming out this next week, okay? And then on the flip side of that, if we start coming back up to 415.15, right, I wouldn't want to chase the move here as there was previous supply here. What I'd want to see is something a little bit more constructive, and then to consolidate and then potentially flag out where we can see a breakout of this level and then go strike for 418.41. So that's something that I'm paying attention to. Now, on the backhand of all of that, you got to pay attention to some of these key indicators. First and foremost is the BPSPX chart. This oscillates between oversold and overbought conditions. Oversold and overbought, overbought, oversold. And what is the S&P 500 doing during those times? Well, you can see it was overbought and it came down to oversold. Now it's coming back up to overbought. Is it going to consolidate sideways? Is it going to, just scream higher? Well, overbought can stay overbought for a long period of time. It's always a possibility. Same here. You saw overbought conditions. What do? Well, we actually kind of went a little bit higher, but we started building out a negative divergence, and then it reversed all of itself. What do we do here? Same thing. Negative divergence, started flip-flopping all the way down. And then right here, it got into oversold conditions. And each one of these times, you can go back and watch the videos. We talked about them getting into these areas. Why? Because we like to be ahead of it and plan for it and be aware. So all I'm telling you now is just be aware that we're in overbought conditions. It's going to have to consolidate, and eventually it's going to oscillate right back down to oversold conditions. Another thing to pay attention to is the percent of stocks above the 200-day moving average. Clearly, it's a lot less than it was earlier in the year. Okay, what is that telling me? Okay, so it's telling me this. The percent of stocks above the 200-day in the NASDAQ, and the NASDAQ has 3,500 stocks, right? So it's a lot of stocks. It's a broad market. Not the NASDAQ 100, the NASDAQ composite. Only 33% of them in the entire composite are above the 200-day, which tells me when it's below the 200-day, right? Like Paul Tudor Jones says, nothing good happens below the 200-day moving average. Now it can change, but I just want people to be aware that as the market has been pressing higher and making this like kind of matching top right here, what you can see is, well, we went from 55% of stocks above it, but now we have internals not matching the price action here. So it tells us that this rally is being held up by a very few names. And we've seen that in the past. We've seen it here. We've seen it here. We've seen it here. We've seen it here, right? And these divergences, they can last for a while, but it's something to just be aware of, that this rally, as we've known, the big tech stocks, they've been kind of holding the market together. And now we're coming into earnings season. You need to be well aware that there is a lot of risk involved, noticing that breadth is kind of weakening. And then you can not only breadth is weakening, but you see volatility coming off hard and fast. It seems to be setting up for potentially some sort of a shock, shakeout, period of consolidation, or so forth, okay? And we've already made, once again, a pretty large run in the S&P 500 from, 380 to almost 418, very quickly. Okay, let's continue on. The one of the last ones. I'm going to go into Bitcoin and the Sailor to Shift tool here too momentarily. Is growth versus value. That relative strength line is not shown on the screen. I hit it, and then I share the cues, what they look like. And the reason why I'm doing this is because I'm tracking really the rate of change between growth and value. When the rate of change crosses from above, right, 0 to down below 0, I marked it on the screen with these red lines. And you can see many times where it crosses down the rate of change, you can see that we've seen sell-offs in the cues. And the most recent ones that we called out were right here. And you can see it's not selling off, but it's just consolidating. So it told us ahead of time saying, hey, if you're going long the cues right here, chances are, and this was also when all of this was lighting up bright red too, it says, hey, we could consolidate, we can pull back, just be aware of what's going on. Well, we're still pointing down, we're still below 0. So, just be on guard saying, hey, maybe the RSI starts coming off a little bit. Maybe you look for it to oscillate down to oversold conditions, and this might come into oversold conditions. Maybe we get a quick hit, and then, hey, we're opening up the door for the cues to potentially buy a pullback, right? It's a pullback from this previous run up of, where were we to, where was this? I'll just mark it really quick. Around 285 up to around, and this is rough, about 320 right in that area, okay? Okay, now I want to show one more. The Sailor to Shift tool. The Sailor to Shift tool we talked about the other day is starting to turn down. When it gets below that rate of change, this 4-week rate of change goes below 0, it signals that the sell signal hits, but it's not necessarily a trigger. The trigger would be the next week. The candle would have to close below the prior weekly low or hit below that, and then that would be the official trigger, which we've seen a couple of times where it had no trigger, but you can see when it does have a successful trigger, we've seen some pretty large sell-offs in the price of Bitcoin. I've done the work. I've looked back through the entire history of Bitcoin, and it has caught every single big sell-off for some reason, right? This is not a holy grail indicator, and eventually it won't work, but it is still working to this date. You can see the last buy signal The last signal was a buy signal, and it triggered right over here, and you can see price has been moving up. So I just want to call out that it is pointing down. That doesn't mean it's going to cross down and have a trigger by any means. I know some people like to front run stuff. It is what it is. That's fully up to you. I'm just continuing to pay attention and watch that. I don't really trade much crypto as it stands at this moment. When I take a look at Bitcoin, which by the way, too, if you look at crypto equities like MicroStrategy, Riot, Mara, like some of these names have been performing very well so far year to date. And if you look back at the history of what these charts look like when they get sell signals, they don't look too hot. Now, if I take a look at price of Bitcoin, it's been very strong, but I did want to call out price is tightening up here. You can see we had this expansion type move. Then we have a dip, right? It got bought up, and now we're starting to coil up into a rising wedge structure, which is typically bearish, but we've seen rising wedges where they maybe pull back and then they start exploding higher. So let's not rule that out, but it is a rising wedge structure. The sell signal is pointing down. It hasn't crossed fully over yet, and we do have a negative divergence there forming on the RSI itself. So yeah, let's say if we get a sell signal, okay, well, where can potentially the price of Bitcoin go to and maybe scare some people? Well, maybe this does break down. Maybe it comes down to around back that 25,000, retest that 50-day, and then it comes right back up, right? It flushes some people out, it digests this gigantic move, and then we can kind of play from it from there. But that's just kind of something that I am paying attention to. That's all I got for you on today's episode, everybody. Hope it helps out. See you on the next episode.